Hey guys, it's Carter. Welcome back to the channel. I hope you guys are all having a great and an amazing day today. We have a very special episode today. It's about NIO, ticker symbol NIO. The stock this year is down about 69%. A lot of people have been freaking out saying, Carter, what is going on with this company? Should I buy it? What's going on? So we're going to be analyzing all this stuff here and answering that question of should you buy it. So I hope you guys all enjoy it. If you have any questions, by all means, ask down in the comments. And don't forget to check out my blog if you guys want to learn more about investing, money management, trading, virtually everything money, side hustles. Make sure you guys check it out. It's completely free. Sign up. You guys know what to do. So starting off, what is NIO? So NIO is an electric car manufacturer based out of China. And what we've seen over the past couple of years is this stock absolutely just take off. The stock went from all the way from about $2 all the way up to $66 a share before selling off back down to these $10 a share levels. Looking at the chart, you'll notice we've seen some natural tendency to get that downward trend right on that trend line here, and it has some support recently at about $9.50. You'll notice it hit it a couple of times each and every time we established some buying pressure. Now, looking at the chart today, you'll notice today was not the greatest time for NIO. You'll notice here that after hours, this thing went from $10 all the way to $9.50, about a 6% sell-off. Now, the reason why we had so much sell-off in general is because of this. Right now, Tesla is offering a ton of discounts for their Chinese vehicles, which is making them, there's more competition. They're being more competitive to get more revenue, get more people to buy their cars. Great job on Tesla, but now all these other car manufacturers based out of China are freaking out because they have more competition, right? So obviously causing sell-off here in virtually every Chinese manufacturer. You'll notice XPeng got some sell-off here at 15%. NIO is only down about 4% today. And then we have Li Auto, which is down, 10% as well. And this just all comes after NIO comes out and pretty much states, or Tesla, that they're going to offer a lot more incentives for these electric cars in China. Okay, looking at NIO's revenue is up about 20%, which is relatively decent. One of the most important things for evaluating a company is not revenue. It's something called the profit margin. NIO has a negative 24% profit margin. So for every $100 NIO brings in, they lose about $25, which is not the greatest. A company cannot thrive and survive if their profit margin is negative, because they'll eventually run out of money, right? Another thing here that's super important is the cash on hand. NIO has about $6.7 billion in cash, which is relatively good to the $1.7 billion in debt. So the company has $6.7 billion in cash, $1.7 billion in debt. They're in a growing sector. But the issue we faced this year and why we had so much sell-off, in general, one, Tesla announcing that fantastic incentive for making them, be more competitive to these Chinese car manufacturers, which overall will convert into more sales for Tesla. Okay, two, NIO has struggled this year with supply chain issues and some delivery. So yes, their revenue is up, which is awesome, but overall they've struggled with supply chain. They've struggled a little bit with deliveries, and that's one of the main reasons why we've gotten this massive amount of sell-off. Okay, answering that question that everybody has is, Carter, should I buy NIO? Okay, NIO for me carries a ton of potential, obviously, but the issue we face right now is, one, there's so much competition in the electric auto space, right? We have Tesla, we have XPeng, Leo, and a whole bunch of others, right? It's highly competitive, which as consumers, it's awesome because anytime there's a lot more competition, just like Tesla's making their prices cheaper, NIO may follow, which will save us consumers a lot of money. As for investors, it makes it very, very difficult to pick and choose the correct stocks. So NIO for me, high risk, high reward. We have that general downward trend. So sellers are in control of this stock. If I was going to do a one lump sum investment and not dollar cost average it, I would try to get it to as low as pretty much $7.50 as possible. A good option as well would be to dollar cost average it. The reason why is because instead of that one lump sum, you're going to be investing consistently into this thing. So as it sells off, what's going to happen is you're going to average down. You're going to average down these share prices. So when the stock recovers, you make a lot more money. The issue with averaging down with a stock is if the stock takes off soon, you have a little bit of money, a little bit of stock to make money, but obviously you would make more if you had more money in it and then it exploded. So for me, I think NIO, I already own shares. I keep it under 1% of my portfolio just to keep the risk level, the volatility down, just because we've seen so much sell off. So for me to look at this thing, I would really, really like to see a trend breakout. That would be awesome. Or just some solid fundamentals for this company. We've just seen too many bad things come about with it. A lot of competition with this sector here. And that's kind of my overall mindset, my plan. And yeah, this could be a massive opportunity to buy in at these lows. But for me, I'm super invested into Tesla and a lot of other electric car manufacturers. I do have shares of NIO. I'm not saying I don't have any because I would be lying, but I just think that there could be better opportunity elsewhere with a higher risk, with a higher reward, but a lower risk. So guys, that is it. I hope you guys all enjoyed it. If you have any questions, let me know down in the comments. Don't forget to check out my blog, and we will see you guys later. Take care.